Hey guys, Krugs here from AutomatedTrading. So let's break down the surfer bot. Okay, the surfer bot is a dynamic breakout strategy. And what I mean by that is we are looking for breakout trades, but not your typical breakouts based upon, like, for example, wave breaker, where you set the support and resistance lines. What the dynamic breakout strategy is a moving strategy so that it keeps calculating the previous pivot points. Okay, so what Surfer does is that it finds previous pivot points and then trades the breakout of them. So you may call it a dynamic breakout strategy, but it also could be considered a trend breakout strategy because it is breaking out of the current, consolidation zone and forming a bit of a trend. Okay, so let's have a look here. We're going to draw onto the chart some lines. So we're going to go here. We're going to look at some particular. Look at these little pivot points here. So we've got one pivot point up the top there. We've got, I'm just going to draw a few of these pivot points on so you can kind of see the trades that the bot will take. All right, so it's finding these key pivot points. If I was going to trade this manually and I'm looking at this chart and going, okay, where would I actually take a trade? They are probably the areas that I would look at taking trades. So once price was to break out of this kind of the support line here, it would hopefully go down and I would be able to scalp 4 or 5 points before pullback or even continuation. Okay, so what you can see here is we have a line that's gone across here. So we have our support. Price has bounced off once, it's come down, bounced a few times, coming all the way along here. It kind of approached it again, went up, and this time it approached it, actually broke through. Okay, so what SurferBot is going to do is SurferBot is going to take that trade there. So I'm just going to put a highlight onto that and show you that this is the kind of trade that SurferBot is looking at taking. Okay, so this one here, there was no breakout of this trend line, We have another one going along here. You can kind of see there is another break of a trend line. So I'm just going to draw another ellipse around that. Okay, we have another trend line up here where there's no break and so forth. So you can kind of see there are two key trades there. You could probably even say there's another one if you look back over here. There's another trade here of a break of a trend line. Let me just draw these two lines on, and there's another one here. Okay, so let's draw some ellipses on and go, okay, there is a breakout of a trend line there. Sorry for the not so horizontal lines. Okay, so they're perfect trades that Surfer would take. The key thing here is when analyzing the strategy is that one of the most important factors of this strategy is the stop loss that you use. Okay, we are looking at an NQ 15-minute chart here, and so if price breaks down here, it actually goes down a few points. Okay, if we look on, over here and I'm looking on the right at the values, it actually goes down a few points before it pulls all the way back and then continues down. Okay, if I was to set myself for, say, a 20-point target, I'm looking for something down here, that means I need to make sure that I have a reasonable stop loss so it doesn't get stopped out before it makes that move. Okay, something like this, price may have pulled back before it's gone through, come all the way up here. Again, price has broken through, and again, there's a bit of a pullback, but this time not on the side of where it broke through and continues down. We're lucky enough that these positions are available for us to have successful trades. Okay, so how are we going to add the strategy to the chart? So the first thing we do with this particular strategy is we like to use our AceTrading wave indicator. So I'm going to add that to the chart now. So you can see on the chart, I have our AceTrading indicators, and Ace Wave is our very popular indicator. I'm going to put my swell size as 4. So I'm looking for swells, the size of the pivot points being around that level 4. So I'm going to put that on, and you can kind of see it's drawn these key pivot points for me. Okay, there's a couple of other pivot points in there, but you can see the ones I drew on the chart are actually drawn the same as our wave indicator. Okay, and what it's doing is every time the price breaks out of those particular waves, Surfer will surf those waves and take a trade. So let me add the strategy to the chart now. Okay, so you can see now that we've added the strategy to the chart, the surfer bot is activated. I'm using the swell size of 4, which matches our indicator. You can see these trades here actually took a trade here. This one here, I think I had the bot turned off because it is at the open, and I don't like to trade the open. Okay, we go down here, we have another one. It broke out here. Okay, took that nice trade. There's another breakout there, and so forth. So The idea of Surfer is that it takes these breakouts, and you can see I was actually looking for roughly about 4 points in my take profit. That means I'm going to need to have roughly about 4 points in my stop loss to have a balanced ratio, because having a balanced ratio is a real key to this bot, because it takes a number of trades throughout the day, and if you don't have a balanced ratio, you're not going to win back some of those losses, because no bot is 100% win rate. Okay, you need to make sure that you do have that balanced ratio. Okay, the risk to reward ratio. Okay, so let's take a look at the parameters for our Surfer bot. Okay, we start with our contracts. I like to keep my contracts quite low for this bot, because knowing that it could potentially take a number of trades throughout a trading day. Okay, so you could be looking at 3 to 5 to 10 to 15, depending on your settings, number of trades. So that I want to make sure that my contracts are low, so that if I do take a couple of losses, I'm not going to be blown out of the water and lose an entire account because of that. Okay. Saying that, it is really important that when we look at our take profit and our stop loss, we use a balanced ratio. Okay, a balanced ratio means that you want to kind of have even numbers, or in some cases, you take profit larger than your stop loss, which is going to allow you to stay in the game with your account and so forth. This bot is fantastic in producing wins from breakout trades. However, often we'll get these little spike outs, and it's really important that we do keep our stop loss in check. Okay, the swell amount is talking about the size of the pivot points. Okay, the larger number we have for swell means that the larger the pivot point, which in turn means you're going to have less trades within the day. Okay, for a 15-minute chart, my go-to is usually around 4 to 5 swell, and that's kind of typical for across a number of charts. But you can use this bot with time-based charts or non-time-based charts, such as a Renko chart or a range chart. So it solely depends on what chart you're actually running. My advice would be to load up our ACE wave indicator first with a swell number that you're comfortable with, and check out the pivot points to see, are you comfortable with the number of pivot points within a session and so forth, and that'll indicate what you want to put on your in the strategy here. Okay. The other options we have a start stop time, which I would highly recommend you use. Having a smaller trading window is going to maximize your profits and limit your losses, because you're obviously going to run the optimizer, and you're going to do back testing for a certain smaller window, which is going to take up most of your time to do that. So you want to make sure that you don't run the whole day, because running a bot the whole day means that you're putting yourself out there for more losses. Yes, you are putting yourself out there for more wins, but we all know that strategies are not 100%. You want to maximize your wins, and the best way to do that is to have a smaller trading window. So trading, for example, the Asian session or the London session with certain values. I'm not going to use the same take profit and stop loss values for an Asian or a London session as I would for the New York session, because they are totally different times in the market, and they have different volatility in a way, and they have different buyers and sellers in the market. People are waking up all different times around the world. So I like to break it up into trading windows and using start stop time for that. And you can also change the color of the waves so to make it a bit more easier to look on your chart. Okay, so now let's talk about what we do here at Ace Trading in how we use SurferBot for our own accounts, and that what we recommend our members do. Okay, so you can see we are in NinjaTrader. We have both Ace Wave indicator on our chart and Surfer. However, what we want to do is we want to go through a bit of a process, and the first step of the process is to use Strategy Analyzer. So we're in Strategy Analyzer, and we have Surfer loaded up for a backtest. What we want to do is we want to optimize to find what are some decent settings that we can run this bot throughout the day. Okay, so obviously there's 23 hours in a futures trading day. We don't want to run the bot for those 23 hours, because throughout the day there are going to be high volatile times and low volatile times and so forth. There's going to be ranging markets, trend markets, and all that kind of thing. We want to focus on a smaller window so that we can optimize parameters for that window and get quite good at trading that window. Okay, so perhaps we have our our bot running for that window for a number of weeks, we can then look at the results from that and go, okay, what can we alter and what can we change so that we can adapt to the markets and modify our strategy slightly rather than starting from scratch and having to do these massive optimizations again. Okay, so what I mean by that is I'm going to start with our start time and our stop time. Okay, I'm going to start trading from, for this purpose, I'm going to start from 7 p.m. and I'm going to go all the way up until the start of London Open. Okay, this is one of my favorite times of the day to trade, so the evening time, because you're going to find you're going to have less volatility, which means that you're going to have less errors with bots, less spike outs and things like that. Price is going to be a lot smoother and so forth. Not always, but generally it is. Okay, so I'm going to start with there and set up that window. So we have about 6 hours. Sorry, we have about 8 hours of trading, which is quite a long time. I probably want to even limit that even more. Maybe start from like 11 p.m. and have 4 hours of trading or whatever we want to have. But we'll start with that, and we can always cut it down. I'm going to keep my contracts at 1. I'm going to start with 20. I'm going to go all the way up to 50 for this little test here. I'm going to use 2 increments just to speed up the process. So I'm looking for a take profit of anywhere between 20 and 50. Because I'm going to be using NQ, okay, I know that anything less than 20 means I'm going to have a stop loss of roughly the same, and anything less than 20 of a stop loss on NQ is quite dangerous. You can get stopped out so easily. Okay, so I'm going to start at 20 as my minimum and go up to 50. Okay, so talking about stop loss, it's important that you do match or have slightly less than your take profit so that you can have that balanced ratio that I've been talking about. Okay, so I'm going to run 2 increment of that. I'm going to actually change up here, and I'm going to run, I'm going to be using minutes, but I'm going to use 3-minute candles. Okay, and what that means is, because I'm going to be using 3-minute candles, I'm going to have a lot more trades throughout the day. In order to limit that, what I'm going to do is I'm going to enlarge my swell. Okay, I'm going to use quite a large swell of like 12. Okay, generally 4 or 5 is what I use for 15 minutes. To have the similar number of trades, I'm going to run a swell size of 12. I could actually optimize this if I wanted to, but that's going to obviously have more increments and take this hemp forever. So what I'm going to do is I'm going to focus on the small window, see how these values go, and then see if I can optimize it again. All right, so obviously I've got increments, so I don't need to worry about that. I've got it set to 12. I'm going to use start stop time. I have my take profits done. I have my stop losses on there. Nothing else needs to be done. Optimized surfer, great. I'm going to add in my commissions because I think that's super important. I'm going to put on here, I've got data loaded onto my computer from the 6th of September. So I'm going to choose again 3 months prior to that. Okay. That was 4 months, sorry. Let's go back. The 6th of June all the way up. Sorry, the 9th. Yeah, the 6th of the 9th. There we go. All right. So the 6th of June up until the 6th of September. It gives us 3 months of data, which is going to give us a good indication of whether these values are any good. And then we're going to match it up with playback and move to our next step. So let's just run this optimization. Okay, so now you can see that we've run the optimization and we're getting reasonable profit factors of 1.72. What does our drawdown look like? Okay, $1,277 for a drawdown. It probably could be improved. Okay, 60% win rate, not too bad. I'm happy with the profits. Let's take a closer look at this one here. So we're going to, yeah, it's actually on the chart there, but I'm actually going to open it in a different tab so I can have a bit of a play around with it. Okay, so have a bit of a look. We have three months worth of trades. We have 200 trades taken. Okay, roughly, that's not too bad of a win rate. Let's have a look at the analysis. We have a reasonable equity curve. So there's a bit of a lull. Okay, and then it goes up. And this is kind of typical of what happens with bots. I can't tell you the number of people that start a bot at this particular point. It does nothing for a month or even a few weeks, and then they pull the pin with, and then they all of a sudden we get all this win. So that happens all the time in bots. No bot has a pure kind of diagonal equity curve. You have to have your lull times, and obviously then you have to capitalize on these winning times. All right, but then we have our equity curve. Let's have a look at when these trades are being taken. So look at the hour, and we'll look at the entry time because that's what we're looking at. Okay, and you can see that at the earlier on in the session we get a lot more wins, then it goes a bit of a lull, and then it kind of picks up here, and then the last bit is not so great. Okay, so from 2 to 3, that bit there is not so good. So if we wanted to improve our our strategy, would be to go back and go, okay, perhaps I don't really want to trade that last hour, so maybe I want to stop at 2 a.m. Okay, or even 1 a.m. and then to get rid of these losing trades here. Or maybe I just want to run for an hour or two, so 7 to 8, or maybe 7 to 9. It's a 2-hour trade, get your money, and then you're done. Okay, I much prefer bots that trade for a short amount of time, get your 1 or 2 wins for the day, and then shut up shop, rather than leaving the bot run just to hand back your profits. Okay, but if we're happy with this, summary, we're pretty happy with the strategy, no problem. What you want to do next is you want to go to templates, and you want to save that template so that you have a copy of it for the future. Okay, but then you also want to make sure that you go to chart here. Okay, and we're going to see some trades. Okay, obviously got the waves on the chart. Let's go back a few days. You can kind of see where the bot starts and finishes, the lines of where it finishes. And we're going to look at a couple of these trades to see if it matches up with playback. I want to make sure that I do run a week or 2 of playback to see if I get the same trades as the strategy analyzer. If I'm getting the same trades from playback to strategy analyzer, then I can have confidence in the strategy analyzer. Okay, the last thing you want to do is run a strategy straight from strategy analyzer straight onto a real account and blow your account. Okay, you want to make sure you match up with this. So let's take note of these trades here. What I might do is I might take a picture of that, and then we'll keep those trades there, and then we'll run it in playback. Okay, so I've loaded up the same settings into playback. Okay, you can kind of see I've got the same times, everything's the same swell, and I've got that same time for those trades. So now what we're going to do is we're going to run these trades to see if we do get the same trades take place. So you can see that we have the same trades being taken. Okay, we have our same values of 18,902, 189,1250, which is a loss, unfortunately. But then we obviously get that loss straight back with our win. Okay, 18,891.5, and then we have the 18,879. So we have the exact same trade. So I want to make sure that I go back and I do my due diligence, and I make sure that I do check to see if my playback is the same as my strategy analyzer. And then I want to load it onto a sim account, forward test it, see if I need any more tweaks, and then run it on a real account. And that is the process that we take here at Ace Trading. Look, we look for any different types of profit factors, any different types of drawdowns, but it is really important that you do follow these processes before just putting a bot straight onto a chart. Okay. Otherwise, I will see you in the next video. Take it easy.